Thank you very much. Okay, thank you very much, everyone, for joining us. So our primary and I think sole purpose today is to talk about the federal single audit requirements related that are being driven by the CARES Act grants that everyone's been receiving over the past year and a half. So we put some slides together to give some key talking points. But really, this is not a seminar. I know the way we've done these meetings in the past is really to have dialogue as we go. So please don't feel like you need to wait until the end of the presentation to ask questions, to give thoughts, concerns, that sort of thing. And the guidance, as I'm sure you're aware, has evolved quite a bit over the past year and a half, and probably will continue to evolve to some degree. But we'll share with you what we know at this point, and if there are any pieces that we're thinking may change and could have an impact on you folks, we'll talk about that when we get to those particular pieces of information. But really, let's kind of have an open table here. I recognize this is the first time for a lot of you folks on the provider side that you're going through federal single audits. So we've included some slides here that are sort of backgrounds about what a single audit is, and we'll spend a few minutes talking through that. But certainly, if we go through it too quickly and you say, "Well, hold on, you've lost me. I really want to take a step back and get a sense of the bigger picture," please don't hesitate, to raise your hand, and we'll slow down and spend whatever time you'd like talking through things. So I think everyone on here knows me. I'm Jonathan Fink. I'm a principal here in West Hartford with CLA. Joining me is Trent Fast. Trent is part of our national healthcare group. So in layman's terms, what that means is he does the second partner reviews for a huge percentage of the firm's healthcare engagements. And he's also involved sort of at a national level in terms of helping to guide the firm's interpretations of guidance that comes out, and trying to help herd all the cats in terms of following the same approaches and that sort of thing.
Thanks for letting me join you today. Appreciate it very much.
So I'm going to share my screen for the slides, and hold on here if I can figure out how to do it. Let's see. I wonder, Andrea, do you need to give me permission?
Oh, maybe.
Oh no, here we go. I found it. I think.
Okay. I can still give you permission though.
Yeah, I think I've got it.
It's going.
Okay. Can you guys see the slides, or are you seeing my calendar?
No, I see the slides.
Okay, perfect. All right. Awesome. Okay, so I'm going to handle the first section here and then pass things over to Trent. So just taking a step back from a general perspective. So as we've mentioned, the amount of CARES Act funding that a lot of providers have received, whether it's the Provider Relief Fund or the Coronavirus Relief Fund, which, as a reminder, even though that was administered through the state of Connecticut, is actual federal money, so that's subject to federal single audit. Both nonprofit and for-profit entities are required to go through a single audit and/or a single audit equivalent for the for-profits if they exceed $750,000 in grant expenditures during their fiscal year. And keep the $750,000 figure in mind, because that's important. How it's being calculated because of PRF is not straightforward. So we're going to spend some time talking through that, answering any questions, making sure everyone is comfortable, because PRF is unlike other grants. Usually it's a case where you get a grant, and whatever money you spend in your fiscal year, that's what's being measured in terms of a potential single audit. With the way PRF was rolled out on fairly short notice last spring, the rule makers then spent the next 6, 9, 12 months sort of figuring out how they wanted it to be incorporated into the single audit. So there's a time delay in terms of how the PRF is being audited, and we'll talk some more about that. So, but one thing to keep in mind is your for-profit brethren who have grant expenditures above $750,000 are also going to be going through something similar to you. It's not called the exact same thing, but it's the same concept. Okay. So just taking a step back in terms of a federal single audit overview, I just mentioned the federal grant expenditures of $750,000 or more during the fiscal year. So this will include all federal grants. And I know from talking with a few of you in individual conversations, some of you may receive some federal grants currently at a much smaller dollar amount, never at a level that required a single audit, but you want to include those when you're calculating what your federal grant expenditures are. So for example, if you say, okay, we normally get a $20,000 grant related to adult day center or something like that, that would be included in the calculation. So it will not be just CARES Act grants. As I mentioned, the Coronavirus Relief Fund, or the CRF, is a federal grant, even though it was processed through the state of Connecticut. And from a timing perspective, the federal single audit is required to be completed and filed within 9 months of your fiscal year end. So for the 9/30 year ends, that'll be June 30 of next year. For the 12/31 year ends, it'll be September 30 of next year. And from a general perspective, it's if you're getting a financial statement audit already, which I think most, if not all, of the folks on this call are, it's going to be sort of a tack on, if you will, to your financial statement audit. And so and we'll get into some of the details, but it's not a double of your existing audit. It's more, another 10 or 20% additional effort with some specific grant related testing. Okay. So I mentioned that the Provider Relief Fund timing is a little bit funky. Here is a graph, or a table, I mean, which sort of shows everything. And the table, this actually comes right from the guidance, the federal guidance. So let's take a couple minutes and walk through this. The slide, Andrea will send the slides out to everyone afterwards, so you don't need to furiously take notes or try and memorize this, but let's try and talk through it. So the way they've set it up is they've broken everything down into periods. And the basic thing to remember is a period represents 2 quarters. Okay, so period 1 represents the first 2 quarters of calendar 20. Period 2 represents the second 2 quarters of calendar 20, and so on through the end of calendar 2021. So you'll notice in period 1, it says April 10, 2020 to June 30th, 2020. That is the only reason the April 10th date is included there is because that's when the first PRF grants were made. They've established that if you had COVID expenditures back to January 1st, those are eligible to be put against the PRF grants. And Trent, jump in if I misspeak on anything. So as you've probably seen, the deadline to use those funds was June 30th of this year. So just let me use a simple example. Let's say you received $100,000 in Provider Relief Fund grants through June 30th of last year. That doesn't mean you needed to have $100,000 in COVID expenses or lost revenues before June 30th of last year, but you needed to have $100,000 in COVID expenses or lost revenues by June 30th of this year. So in other words, they give you the money and you have up to 18 months to use that money. And that's going to tie into the PRF portal reporting, which is not a focus of our discussion today, but clearly it's on everyone's minds. So we'd be happy to take some time during our session and talk through that a little bit as well. So the reporting time period for period 1, the portal opened, the reporting portal opened on July 1st, and the submission is due on September 30th. And there's sort of an asterisk next to September 30th because HHS recently announced that there's a grace period of 2 months. Now, grace period is not the same thing as an extension, but basically they're saying if you were to file your portal reporting after September 30th, there's not going to be a penalty. They're not going to recoup any money immediately, but they did say you would technically be out of compliance. We don't have any additional information beyond that in terms of what that would mean. in terms of, okay, you say you won't recoup the money now, but are we gonna have a strike against us that hurts us later, or is there gonna be some sort of repercussion later down the line? But they have said there's a grace period, and from the perspective of a single audit, it's not going to be a finding if you filed your report on October 5th or October 20th or what have you. It needs to be in trend. Is it 60 days after year end, or is there a specific date in November? I forget.
It was 60 days. I think it noted November 30th.
November 30th, yeah.
I believe so.
So that's the back end date where you need to get it in. Our understanding is if you filed after November 30th, all bets are off. There's a chance you may have to give back all of your money for period one. There could be penalties, that sort of thing. So recognizing that everyone's got a lot on their plates due to COVID and all these CARES Act considerations, our gut feel is if you can file by September 30th, that's the best answer. If you need to slip into October, I don't think it'll be the end of the world, but we just don't know what the repercussions might be. Okay. So what's going to be, so you'll see going back to the slide here, you'll see on the table in the fourth column, there's a reference to included on CFA. So CFA is the schedule of, it's basically the schedule of the fund expenditures that gets included as part of the single audit. And we'll refer to CFA at a couple points during our presentation here. So in terms of those of you who are September 30th year ends, and if you see it says include on CFA, fiscal year ends June 30th, 2021 through June 29th of 2022. So what they're saying is for anyone with a fiscal year end within that 1 year window, which obviously everyone's going to fall within that 1 year window at some point, you need to, period one PRF expenditures need to be included as part of your single audit calculation against the 750,000. So again, just sticking with the 930 year ends for the moment, what that means is that let's assume you have just CRF and PRF. Your CRF the relevant CRF expenditure number is going to be what you used during your fiscal year ended 9/30/21. So anything between October 1st of 2020 and September 30th of 2021, plus any PRF expenditures from 1/1/20 to 6/30/20. Okay, and it makes no sense at all, and there's no rhyme or reason to it outside of the fact that the PRF is far behind and this is their way of playing catch up. So let me just pause there for a second and see if anyone has any questions or needs me to go back through anything. Okay, all right.
Jonathan, actually, it's Bill Ginter from Mary Wade.
Hi, Bill.
Hi. You mentioned the CRF measurement through 9/30 of 2020, but those actual reporting periods were March, April, May, and June for that grant application. So what's the difference between those two endpoints?
Yeah, so if I said 2020, Bill, I apologize. I meant 9/30/21. So
okay.
So it from a CRF perspective, it'll be the November and December 2020 grant payments.
Okay.
For the 9/30 year ends, those are the ones that'll be included.
Gotcha.
For the 12/31 year ends, I forget. I don't know if any of that slipped over into early calendar 21. We might have to take a look back at that.
Okay. All right.
I think most of the grants said through 12/31/20, so possibly not.
Yeah, and so the good thing about we've mentioned a couple points about the $750,000 threshold requiring a single audit. That's an important piece to remember that we didn't include on the slide, but I think it's very relevant, is this is not a cumulative sort of thing. So let's say you do your analysis for a 9/30 year end again, and you say, okay, we had 400,000 of PRF and 200,000 of CRF. You know, that adds up to 600. You're less than the 750. You're done at that point. You don't need to carry that forward and add it to next year's or anything like that. You look at each period on a standalone basis. So in theory, you could be part of an organization that has $500,000, $600,000, $700,000 of grant expenditures each year. But as long as you stay below that 750, you would not be subject to the single audit. Does that make sense?
Thanks, yeah.
Okay. So for the 12th, going back to the table here, for 12/31 year ends, you're going to include period 1 and period 2 of PRF when you're evaluating that $750,000 threshold. So instead of just looking at the PRF expenditures through June 30 of last year, you're going to look through December 31st of last year. So it'll really just be sort of a 1-year time lag. So you would say, okay, what are my CRF and any other federal grant expenditures during my calendar fiscal 2021 plus my PRF during calendar fiscal 20, and those are the pieces you would add together. Okay, and then going forward, so period 3 covers the first half of calendar 21. So for a 9/30/22 year end, what they're going to include is period 2 and period 3. And then for a 12/31 year end, 12/31/22 year end, they'll include period 3 and period 4.
Jonathan, this is Michelle Pacetta. How are you?
Good, Michelle, how are you?
Good. I just have a question. So what you're talking about here is essentially recognizing revenue based on when the funds were spent. I'm under the impression that the single audit has to do with when the funds were received, not necessarily recorded.
Nope. Actually, Michelle, it's based on when they were used. And
when they were used.
And what we can touch upon this, there is most likely going to be a disconnect between when you recognize these grants for GAAP purposes and when they're being included in the single audit. And that's not unique to this particular group on the call. We're seeing this across the country.
Okay, so if we recognized funds less than 750 when we did our financial statements for our 9/30/2020 year end. Yep. Do we carve out the portion that was recognized in 2020 from the $750,000 threshold?
So your GAAP financials, Michelle, nothing's going to change. Nothing we're talking about today is going to require you to go back and revisit your 9/30/2020 financials. So think of this as almost like a parallel track in terms of a sort of a second calculation, if you will, of PRF. So in your case, Michelle, the PRF revenue that you recognize for GAAP purposes at 9/30/2020 would have been anything you received and used through September 30th of last year, correct?
That's correct, yes.
So what you'll want to do when you're calculating the 750,000 threshold for this year's single audit is you'll want to say you're going to want to back up from September 30th of 2020 back to June 30th of 2020. So that July, September, and August isn't going to be evaluated for single audit until your next year. Did I say that right, Trent?
You did. Yep.
Okay.
Yep. Well, I understood what you said, but you and I have been living in this forever.
Yeah, I know.
And Jonathan, you also touched on the expenses versus the revenue piece of it. I think that's a good distinction. Normally, forget PRF, right? Normally, as you said earlier on, you look at your fiscal year and you have federal awards received in that fiscal year. And the flip side of that is expenditures. So you've got to receive the money and have expenditures for it. So just like in this case, you have to, for PRF, we're looking at the periods 1, periods 2, those 6-month periods there for what you received it. But then you have that 6-month, a 6-quarter period, a year and a half, where you can have expended the dollars. So we're really mismatching periods from when you received distributions to when you incurred the expenditures, but they both have to be there, right? So for example, in period 1, Let's say you received $800,000 of PRF, but you only incurred $400,000 of expenditures through June 30, 2021. You only have $400,000 of really revenue to recognize. Now, unfortunately, that means you probably have $400,000 to pay back.
Right.
But that's how it works.
Yeah, and Michelle, the good thing with that approach versus doing it based on receipts is you could envision a potential scenario where someone is getting towards the end of their fiscal year and they say, okay, I've had $500,000 worth of grant expenditures. I don't need to worry about a single audit. And then suddenly they get a huge payment right before their fiscal year end. So I think that's sort of the theory behind them doing it based on expenditures instead of receipts.
Certainly. Okay, that makes sense. Thank you.
You're welcome. Any other questions on the timing before we shift to the next slide? And again, we'll get these slides out to folks. And I know sometimes, I mean, as Trent said, we've been sort of living and breathing this now for a couple months, but it's not intuitive. So if you think you've got it, and if you're like me, you'll 2 hours later, you look at it again, you're like, wait a minute, I thought I got it. Now I'm completely confused again, and that's fine. You can reach back out to us and we'll try and help walk you through it again. All right. So this slide here wanted to talk a little bit about some of the single audit considerations. As I mentioned earlier, for those of you who are already having an audit of your financials, this is really going to be sort of an addendum to the existing audit. The good news, as I mentioned, is this is not subject to the same reporting deadlines that you may have with your bondholders or with your bank or that your board may have set, et cetera. So this is something where, if I know I've got clients where, there's a real crunch once the audit starts to try and get the audit done and off to the bank or through the board approval process, et cetera. The work, your auditors can do the work for the single audit. A lot of it can occur concurrently with the regular audit field work, but you don't have to worry about, oh, gee, I've got another report I need to get out. We only have 30 days or 60 days or whatever after the audit starts. And, you have some breathing room here. So a single audit involves the audit of financial statements. And one of the distinctions will be your audit report, your typical audit report you receive will reference government auditing standards. And that's not because, that you've suddenly become a government entity or subject to government, standards and everything you do, but just that this particular audit, because it's a federal grant, is subject to government auditing standards. And that we'll talk a little bit about what that means. Part of that is obtaining an understanding and performing testing of internal controls. So what that means is, if you probably in most cases, when your auditors are doing testing of expenditures, for example, that they're saying, okay, I'm going to pick a sample of expenditures, and I want to see that you have invoice support for this expense that you booked. So that will still be performed as part of the single audit, but there's a second piece where they're going to look at the related internal controls over that expenditure. Most of the time, what that means is, what are your approval what's your approval process in terms of approving an expenditure before the payment goes out. So usually, it's some form of sign off. A lot of organizations will say, okay, invoices up to 5,000 need this approval, up to 10,000 need this approval, so on and so forth, based on sort of the hierarchy of dollar amounts. So I think what you want to think about is, if your current processes, it's not clear how expenditures are approved, for example, think about, is there a way, before the audit starts, is there a way that you could sort of indicate how something was approved? Now, again, we live in a electronic age. It's people working remotely. It's not like 20 years ago where everything was hard copy and approvals had to be signatures on pieces of paper. It could be a case where something gets approved in the system. If you're processing invoices electronically, it could be a case where things are batched together and there's an email that comes back and says, hey, yep, I reviewed this batch of invoices for this week. I approved payment on them. So there's not one way to do it, but we really, whether we're your auditors or someone else is your auditors, encourage you to really think about if you don't have a clear documentation trail for approvals of something, you may want to just think, okay, how could I demonstrate this to the auditors? I use the example of expenditures. Payroll is probably the other most popular one. If you think about COVID wages, bonuses, and that sort of thing, oftentimes are being put against PRF grants. Okay, how were those bonuses approved? If someone went from $15 an hour to $18 an hour and a temporary COVID differential, how was that differential approved? And that'll be part of the single audit testing. Let me just pause there for a moment. Does anyone have any questions? Okay. So the third bullet here, part of the single audit will be testing with compliance with the terms and conditions of the federal awards. And Trent will talk a little bit more about that in a few minutes. But what that basically comes down to is, this grant was given to you. It has certain permitted uses of it. Was the grant money used in the appropriate ways? Which I think at this point it's sort of been beaten into everyone's heads what the grant can be used for in terms of eligible expenses and lost revenues and that sort of thing. I'm not anticipating many providers are going to have trouble with that, but just something to keep in mind from a global perspective. There's been concerns at various points across the country about fraud with PRF, and I can't think of any details off the top of my head, but I'm sure there's been a case where money was received and then distributed to an owner or something like that. Just clearly things that would not be permitted. But you also want to think about, if you decided, gee, we got this $300,000, we didn't actually have any COVID cases and our expenses were minimal, so we decided to, put in a therapy pool for our residents. That sort of thing, I think you'd probably have a hard time being able to say, yeah, we put this therapy pool in response to COVID. And that's really sort of the standard that sort of underlies all this is, costs costs that were incurred to prepare for, prevent, respond to COVID, or lost revenues that occurred as a result of COVID. So the last bullet here on this page, I mentioned the government auditing standards, which you may have heard the term yellow book, which is just sort of the old-fashioned nickname for it that stuck around all these years. I think it actually used to be a yellow covered book that had all the standards in it once upon a time. So that name is stuck. So that'll be the standards under which this part of your audit's performed. Okay. A couple other things to think about, and then I'll shift over to Trent for a few minutes. I talked about the internal controls over expenditures, over payroll. You also want to think about, in terms of that CFI I referenced earlier, the schedule of expenditures of federal awards. What are my controls over that? Again, I try and put this in simplistic terms. I'm guessing that for most of you, it'll be a case where there's an individual that prepares it, or there may be a couple folks that work on sort of pulling the information together, and then there'll be a second person who reviews it. That would be a great example of an internal control over the preparation. And one of the challenges that we as a firm run into sometimes on single audits is a nonprofit will receive 10 different grants, 10 different federal grants. And if you're subject to single audit, if you're above that $750,000 threshold, you need to include all of those federal grants on there. So one of the things we'll often incorporate into our audit approach is, okay, how do you guys get comfortable you're not missing any grants on there? It could be a small $10,000 grant that you received, and that you always get it and it goes for the right purposes and that sort of thing, but it hasn't been a focus in the past. How did you make sure you captured all those? The second piece is, okay, how did we make sure that we included all the COVID costs? whether it's payroll, non-payroll, et cetera. And then finally, the calculation of lost revenues. Did someone do a ticking and tying just to make sure they pulled the right numbers from the right quarters, et cetera. In addition to that, what your auditor will look at as part of the single audit is the policies and procedures. As I mentioned, part of that is to make sure that the money received was only expended for allowable activities. And again, in this case, related to COVID, and to make sure that only allowable costs are charged. So you could have a case where you say, okay, I've spent all this money, but maybe some of it didn't go towards allowable costs. We lost track of it, whatever the case may be. That's part of what your auditor will test. And then, as I mentioned, the internal controls over the payroll and the non-payroll expenditures, and then internal controls over the reporting that you do to HHS, which is basically, it's going to come back to the preparation of the CFA, and if the board has indicated a desire to approve the portal report before you push submit, that would be relevant as well.
I guess one thing I would encourage in this is that since especially the single audit piece is new to so many people, there may be findings over the policies and procedures and the controls. Don't get overly concerned about that. There's gonna be a lot of them out there. It's new to everybody. The whole system and process is new to so many people. So some will show up. We're of course, as Jonathan mentioned earlier, controls look different now. So we're going to certainly try to be understanding that. Yeah, here's the way you did it, right? You had a meeting once a week. You had a list of expenses. You went through it, and that's your control. So if there's things you did, document it now. Keep it in mind, and just make it that much easier when we can actually walk through the audit process with you, whoever your auditors are.
Yeah, and again, there may be folks on the call who used to work at public companies and went through Sarbanes-Oxley audits, and that's a really high standard that most of those controls are being held to. As Trent was just saying, it may be a case where you say, hey, we have a weekly meeting to talk through expenses. If you can say, hey, listen, here's the agenda. We don't keep meeting minutes because it's not a formal board meeting, but here's the agenda of the 6 items we covered each of those monthly meetings. And if we can see on there that COVID expenses is one of the items, that is adequate documentation in most cases. Okay. Yeah, and I think, I mentioned about the policies and procedures. I think in my general experience, nonprofits are very good with having policies and procedures, and just, this is how we spend our money and how things get approved. Excuse me, but sometimes the documentation is not formalized. So that's why we've included a couple examples about there's not just one way to document how a control is performed. All right. I'm going to turn over to Trent. I'm not going anywhere. I'll be here to pipe in with comments and answer questions.
Yeah, thanks, Jonathan. One of the questions that I think we're getting more answers on, but it seems to be lingering a little bit, is you look at organizations that have multiple entities that are subsidiaries, brother, sister. You have a consolidation, a lot of different ways that multi-entity organizations are crafted. You have this question on where do we have to perform a single audit? For example, we have consolidated financial statements that we pull in 6 subsidiaries for that consolidated financial statement. Do we need to be looking at that single audit on all these individual ones? Can we do one single audit? So the uniform guidance that you may have seen that in a couple other slides, that's really the regulations that all fall under the single audit umbrella. It's a little bit broad. It really identifies that if you have a single audit, if you have a financial statement that has over $750,000 of federal awards on there, you need to have this single audit. But you can address that in a couple different ways. You could have one audit with everything on it, or you could have multiple smaller ones that are out there. The compliance supplement, which is the guidance for PRF. So there's a separate PRF section that says, here's how we do our single audit for that. it identifies that that your financial reporting and your PRF portal submission may not look the same. Okay, so the reason that that's important is that you might say, well, we have multiple subsidiaries, and because of the distributions they received, we had a couple that had targeted distributions, we moved the general distributions around, whatever that looked like. We have a series of PRF portal submissions, right? But we also have a consolidated audit. You can just do your audit at the consolidated level for the single audit, right? So that saves you time and effort and money. So rather than needing multiple single audits, you can just have the one main one. The question that inevitably comes up is, well, what if all my subsidiaries have less than $750,000? Does that mean we can not do a single audit? If you have an audit at the consolidated level, that is really, anytime there's a financial audit that you have to look at your total federal expenditures. So if you have a consolidated audit, it's got over 750, you're gonna have to look at it from that standpoint. And that's where my encouragement is, if you can do one single audit, do one single audit. Even if 3 received funds and a 4th subsidiary didn't, it's all one big pool for testing, for compliance, all that stuff. So there's a little bit of flexibility there, but I think in general, I would look at as consolidated, as simplified as you can get when you look at that. Are there, and Jonathan, maybe you could even answer this, are there a lot of organizations represented on this call that are going to have situations like that, where you'll have multiple entities, consolidated statements, combined statements?
I think in most cases, the financials are reported at a consolidated level for the folks on this call. And there may be some folks where there's multiple entities that are part of the consolidation that receive the money. But I agree with you, Trent. I think if you can do a single audit, so just one single audit, I think that's a better approach. I mean, again, you're going to have the higher materiality considerations if you're looking at it on a consolidated basis,
Right.
Versus, so if the materiality is 500,000 for a consolidated basis, but if you broke it into pieces, there would only be 100,000 each. There's going to be more work on your side and more work that your audit firm will have to do. So, certainly for anyone on the call, if you have a specific scenario that you're not sure how your situation falls into what we're talking about, please speak up and we can talk through it.
Or don't hesitate to ask a question afterwards too. Happy to help you figure it out. It's nothing straightforward as we look at this. So, all right, go ahead and forward on, Jonathan. Then, are there any other questions on that? Just kind of giving you a sense of everything that's involved. Yeah, as we look at a single audit. So this compliance supplement I referenced, that comes out every year. It goes through June 30 year ends up to just before the next June 30 year end, right? So June 29 really. So as you looked at the cutoff on that table that Jonathan was walking through on the timing earlier, you may have noticed that a couple of those said through June 29th, and that's because of this phenomenon. So the 2020 compliance supplement came out. It covers your June 30, 21 audits. It'll cover all the way through June 29 of 22, right? So the next year, there'll be another compliance supplement. So we're hoping that it looks a lot like the current one does. We expect it would. We don't think they want to rewrite everything for PRF. It's pretty consistent from year to year. And that includes thousands of programs. So it's not just PRF that's included in this compliance supplement, but PRF is part of it. But within that compliance supplement, it references a lot of different factors. It references all the terms and conditions for the various distributions. So that's, as we think about our testing, that's one thing we have to keep in mind. It references the HHS FAQs that are out there. There have been a couple post-payment notice of reporting requirements. I think the last one was June 11th, maybe. It also references the HHS reporting portal because a portion of the testing is that. So it references all these different things as far as guidance that goes into the compliance supplement. I'll talk about this here in just a moment, but there's really not a lot of detail in the actual compliance supplement, which is the guide for the single audit. It references a lot of places. The reason the HHS FAQs is in yellow there is that this massive compliance supplement regulations that are out there. One thing it includes, it's a fairly small comment actually, but it identifies that under the CARES Act, and subsequent acts. There have been so much additional guidance in the form of FAQs on all kinds of different programs, and those change consistently. If you try to keep up on the HHS ones, for a while there, it changed weekly, either new ones or they changed existing ones, or sometimes they took them away. But it identifies that you shouldn't have new compliance requirements or findings based solely on FAQs. So what that means is that if the compliance supplement identifies here's how you can spend here's allowable expenses, and the FAQs have some nuanced details in there that have maybe changed over time, we have to be careful on how we look at that. Maybe the compliance supplement in other areas, terms and conditions, really give enough guidance on that, but the FAQs alone aren't the final authority on that. So as we talk about some confusion, like on what expenses are good, right? This you need incremental costs in there. What can fall under that prepare, prevent, respond item? There's a little bit of uncertainty in some of those. So that's why I point that out. We're all trying to figure this out a little bit as we go on. But again, if when it comes to what kind of expenses are allowable on this, talk to your auditors. When it comes down to the single audit standpoint, if we look at an expense and say, well, nothing leads us to believe that is a wrong expenditure, and you have support for that, we look at that and say we're probably not gonna have a finding for that. So keep an open discussion on that, I guess, is maybe the last comment.
And I think consistent with, and again, I'm speaking from CLA's perspective, but for those of you that we don't work with, please pose this question to your auditors. But I think from our perspective, if you come to us, either in the time leading up to the single audit, or even, once a single audit starts, and you say, hey, listen, I've got some expenses here, and I'm not sure, whether I should include them, or I'm not sure I put them in the right place. Let's have that discussion, just like we would on a financial statement account, because I think let's have a dialogue there. We're not gonna, it's not a situation where, yeah, we'll answer your question, but we're going to give you a finding because you asked it. Let's have that discussion as you're thinking through it, and we can give you our thoughts before you make your final decisions.
Yeah, so have those been discussions that anyone on this call has had? Have you had a lot of questions where is this allowable, not allowable? Well,
hi, this is Adam. Jonathan and I talked a little bit yesterday. We were just reviewing some reporting for the portal, and I think it's, as if you can reasonably explain why it's related, then, I think sometimes you just have to use your best judgment. Like you said, a new pool isn't related, but maybe teleconferencing equipment or air purifiers.
Yeah, no, Adam, it's a great point. And I think, and again, as Trent mentioned, the FAQs guidance continues to evolve and probably will continue to evolve. But I think if you can keep in mind, okay, if I had a government auditor in here who we all know are a rather humorless bunch, and they'd say, okay, you've got this payroll expense here, explain to me how this relates to COVID. I think that's what as you're choosing expenses to include, I think you just want to kind of have that thought process. If someone were to ask me the question, how did this relate to COVID? I think, I think you just want to have your thoughts together. And I know early on it might have even been on an earlier session of the CFO Forum, someone had raised the point, well, everything, because we have COVID in the building, or because we're trying to keep it out of the building, every single expense we have is related to COVID. That's a fairly aggressive perspective. I'm not saying it's absolutely wrong, but I think you'd probably have more of a challenge trying to justify that your full CEO salary, for example, should go towards COVID, because I think a very easily rebuttable presumption is, okay, well, your CEO had a salary prior to COVID. Your CEO was doing other things during COVID. So I think, try and think of it in terms of, what the costs are. But I think also just try and use a common sense test. I'm guessing most of you are not going to have a problem with it. But again, sometimes you get expenses that are sort of gray. And those are the sort of things, please, reach out to us, reach out to your auditor, and we'd be happy to talk through them.
Go ahead and jump forwards. All right, so we're gonna kind of get granular here to a certain extent. So if you haven't been part of a single audit before, this is all brand new. Jonathan will walk through what are really kind of the steps. And if you have a single audit, right, you've got a financial statement audit. There's this yellow book or government audit standards component. Then there's the single audit or the uniform guidance. A big piece of that testing is looking at specific compliance requirements. So on this larger compliance supplement that's out there for thousands of programs, there are, I think it's on to 13 now, different potential compliance requirements that will be tested if they're applicable to a specific program. In the case of the Provider Relief Fund, that CFDA, that 93.498, that's how they categorize all the different programs that are out there. They've identified that these 4 compliance requirements will be applicable, and really A and B go hand in hand pretty much all the time. That's really looking at your expenses. So the activities allowed or not allowed and your allowable costs. What are you using the money for? What are you spending it on? And even within that are the costs that you're spending it on, even if it's kind of for the whole overall allowed purpose, are they allowable under it as well? So this is where the discussion on are my CEO expenses, the therapy pool, are all my plexiglass, what's allowable within there? We have hero pay or whatever it's going to be. So that's a piece that we would have to test as part of the single audit. The normal way you do that, it's a sampling process, right? So we'd say, all right, here's your pool of expenses. You had 675 individual expenses coded that you're saying fall under PRF. Then there's a process where we'd sample it, 25, 40 are the usual parameters you look at in there, and then we do testing at it. We're testing, are they approved, right? What are your internal control processes over there? Did you have a meeting that you talked about and approved it? Did you actually have a piece of paper you checked off or initialed? And you walk through that process. And another compliance requirement is L is reporting, and this is really just looking at the submission to the HHS portal. That compliance supplement again lists out specific things to test. So we're going to look at really 2 different approaches. Number one, what are your control processes over that? Right? Did someone who put the data together? Did someone review it? Who approved it? Who submitted it? That kind of a thing. I would expect that there's not going to be a formal policy written on that, right? Because everyone's doing this on the fly, but you'll have a process that you went through. If we're your auditor or anyone else is your auditor, we can't be part of that process. So if we helped you prepare schedules, for example, for the inputs, you need to make sure that you have some type of documentation that was approved. Again, it might simply be, hey, Jonathan, thanks for putting this together. We think it looks right. We're going to go with it. Right? You've got some approval that shows up there. If you don't add some, I mean, it's not like we're going to go back. I'm not saying to go back and document something that didn't happen, because ultimately you approved it, right? You put it in there, you had to put it in yourself, so you've approved it. So just make sure there's something that your auditors can look at to say, yes, here's your process for it. But within the actual report, there's not a lot that we're supposed to test. The main things that have been looked at are actually, I've got this on further slides. I'll get that down to in a second. The last one, and is special tests and provisions. The senior living world probably doesn't have as much of an issue for this, I'm going to guess. But the idea is that if you have out-of-network patients that you're serving, you can't charge more out-of-pocket for them than you would an in-network patient. Right. So if there's a deductible or a co-insurance or something like that, you can't have additional charges more than if someone was in network. That might be a little more of a challenging test. I think it's going to mean pulling a lot of information out of systems and identifying who's a COVID patient, what kind of billing was there, what kind of out-of-pocket or patient responsibility numbers were looked at. So that might be a little more challenging to test. I jumped the gun a little bit, Jonathan. I know there's more detail on the compliance requirements in the next slides, if you want to jump to those. Okay, so from an expenditure standpoint, it's important that we can, from a single audit perspective, identify how you apply those costs. Right. So in the portal, you have expenses or lost revenue, which is very unusual again for a grant program, right? So that's part of why it all looks different. But want to make sure we understand you have $1 million and we're claiming all of it, right? You said we met all of it. How much of that was payroll, non-payroll? Is there capital in there? Is there lost revenue in there? And the reason that's important is that without going into details on exactly how you'd make the distinction from a dollar standpoint, if you have a small number of expenses, but it's mostly lost revenue, those expenses may be small enough compared to the total that we wouldn't even walk through those expense testing, right? So it's important to understand that piece, and you have that information. It's in the portal, but that's really one of our first steps in understanding what we're going to do. So exactly what we test will be driven on, in part, on how you applied the funds that you received. Another example is if you have infection control, both grant awards and expenditures, that'll look different because they have different allowable costs than your general expenses do. So we want to understand the differences that you're looking at there. Were you gonna add something, Jonathan?
No, I don't know. I was going to say that you had touched on this, but you added some parts that I think were very relevant.
Gotcha. Okay. Yeah, I think that hits both of those. And I think I touched on a lot of this stuff in here already. I mentioned this, general disbursements versus infection control versus targeted distributions. We need to understand, or other targeted distributions, what are the different compliance requirements under each type of distribution. The terms and conditions are very consistent for a lot of them, but there are some differences in some. So we take a look at that as well. This is maybe more of the auditor's side to think about it, but I mentioned that we're going to look at your population and take a sample out of it. Right now, we're thinking that we could probably take one sample and for everything, and just identify different aspects in there. So ideally, we're not going to have both 40 transactions for general and 40 for SNF and 40 for uninsured or whatever it's going to look like. And suddenly we're testing 200 different transactions. Ideally, we're not going to be doing that. We don't think we'll have to. So our goal is to keep this as simple as possible as well. Go ahead, Jonathan. This is kind of a recap of the things we talked about. What's allowable? The overall principles, keep in mind that prevent, prepare for, respond to. That should always be what you fall back to. HHS has kind of fallen back to that as well. A lot of their FAQs have gotten a little more general. So that's kind of what we always encourage people to go back to. So what Jonathan talked about as well.
Yeah, and I think an important piece here on the fourth box here, and this has been, I think, mentioned many times in various ways over the past 12 to 18 months, but you just need to keep in mind that whether you're talking about PRF or PPP or CRF, the payments can only be used once, so no double dipping. And PRF kind of says, we're the payer of last resort. That's probably more relevant for your PRF portal reporting than for the single audit, but just wanted to remind everyone of that, just to make sure, if you had $1 of COVID payroll expenses, that it's only being used once.
I go, yep. There's a couple slides here. I'm not going to read through all of them, but just identifying within the compliance supplement, these are all listed out as potential allowable expenses in there. So again, fits to a lot of things we've been talking about. And really you put the lens of the prepare, prevent, respond to over this, I think is a good way to look at that. Then the next slide too, as well, Jonathan. This one is really focused just on the SNF infection control. Again, it's a much more focused use of the funds. So between this slide and the previous slide, we just kind of list up, here's what's in the compliance supplement at the broader level of what can be included. You might look at this and say, all right, FAQs say this, so then let's make sure the FAQs don't disagree with what's in here, right? And then go forwards with it, and it meets the PPR, prepare, prevent, respond idea as well. Then lastly on here, there's some resources out there. You can jump in if you want to, Jonathan. We just dropped this in here on where to find FAQs and all the terms and conditions. And the FAQs are broken out a little bit more than they were in the past. So hopefully easier to navigate through.
Yeah, I mean, the FAQs are what you'd expect them to be. They're very specific questions that HHS received, and they wanted to publish sort of their response. And as Trent mentioned, it's highly possible that you may have, if you looked at the FAQs 3 months ago and found one that you thought answered your question, it's possible that that response has changed or disappeared or what have you, which is frustrating because I think, you know, everyone is trying to do the right thing and keep up with the proper use of the funds, and for some reason they keep sort of changing the rules of the game. Sometimes it's minor changes, and sometimes if you think back to last fall when we were going through the whole thing with lost revenue, sometimes they're very significant. But I think you know, I think we're happy to answer any specific questions that people have, and you know, if something has changed recently, we'll try and point you in the direction there, and if we're not sure, we can get you an answer. And then the final slide here, we just included contact information for Trent and myself, and then I included a link to CLA's website that kind of has some relevant guidance related to CARES Act programs, PRF, and that sort of thing. You'll see some articles on there, and I think there may even be some recorded webinars and that sort of thing. Just again, if you're in a situation where you feel like, gee, I'm trying to play catch up a little bit and I want to get more comfortable with things, I think you'll find some helpful resources there. All right. All right. So what questions do you folks have on your minds? Concerns? What do you want to talk through? And again, no question is dumb. From my perspective, I'm fine if you want to share specifics related to your organization and trying to figure out how you fit in with some of these requirements. And I'm guessing a lot of the questions that you may have, other folks on the call may have those questions as well.
I have a question. We never used full agency staffing prior to COVID-19. So we have put all of our agency staffing to COVID-19 because we're only using them because we can't get staff because of COVID-19. So is that allowable to just use it all?
I think so. You know, again, I think you want to be able to.
That was a big worry of mine.
Yeah, no, I think just in your comment there, Lori, I think you've demonstrated there's a pretty direct connection between the fact that you need to use these pools and COVID-19. You know, so I think if you know, again, from our single audit perspective, you know, we would want to see the support for the costs and just sort of understand the rationale. But no, that seems reasonable to me. Trent, I don't know if you had anything to add from your side.
I agree. I mean, you might want to take the consideration of staffing in there. You know, did you lose staff and have to replace staff or add, right? You know, so there's a consideration in there if you just had to switch to full staff, full pool, you know, otherwise. But I agree. Even if you just look at the additional costs you had above and beyond if you had hired staff, you know, at a bare minimum.
Yeah. No, but I think from a general perspective, and I'd be interested in other people's thoughts, but, you know, I think there's a pretty strong argument to make that, you know, it was challenging to get CNAs and nurses prior to COVID, but that challenge, you know, has gone up through the roof since then. Would that have happened without COVID? I'd say it's pretty hard to say no. I'm pretty hard to say that it wouldn't. So, you know, I mean, I think you'll be able to make that argument. Again, I think you want to keep the perspective as well of, okay, you know, if our normal, I'm using made up numbers here, if our normal payroll costs are $1 million a month, and now I'm putting $3 million in as COVID expenses, you know, does that pass sort of the common sense test? Probably not. But, you know, if you're saying, hey, we're normally $1 million a month, now we're at 1.2 million because we have to use a lot more agencies, could that 200,000, you know, be COVID expenses? Absolutely. You know, and if it's a case where, you know, it's a bigger number, then that doesn't negate it. But I think you want to just sort of think about, okay, what would my normal costs have been in your case, Lori? If I was able to hire people full time, what would those costs have been? And maybe, you know, all the incremental pieces, very clearly COVID, and then think about if some of the other pieces would be as well.
Thank you.
I have a question with regard to payroll. And so what's unique about the PRF funds, of course, is that we're able to submit for lost revenues.
Right.
When we're trying to support expenses, are they going to allow a PPD calculation? Just because it feels sort of like it's double dipping. I'm saying that even if my payroll costs remained flat and my census dipped 10-15%, we're using using PPD. I'm trying to capture, right? But in addition to that, I'm also asking for the lost revenues. How is that going to be viewed?
Yeah, so keep in mind that from the PRF perspective, they've said all along that they're going to cover COVID expenses before lost revenues. So if you have a lot of lost revenues, the expenses become a little less important. If you say, gee, I'm really on the fence as to whether I should include this expense, if you've got a ton of lost revenue that you're going to be able to apply, it probably becomes a little less critical. If you're in a situation where you say, hey, we had a lot of expenses, actually our revenue didn't go down that much, then I think you're going to want to put the related focus on the expenses. So again, that's just sort of an overall reminder and sort of thought process. But I think, Michelle, you raise a really good question. I don't know if there's a black and white answer, but if I'm understanding you, you're saying, hey, listen, our census went down, but due to COVID, we had to keep a higher staffing ratio, for whether it's for infection control or, whatever the other considerations are, that absent COVID, if our census went down 10%, we would have reduced heads, we would have reduced our workforce. Am I understanding you correctly, Michelle?
Yes, that's exactly correct. Yeah.
Okay. Trent, what do you think on that one?
I've had that same conversation with other organizations that have taken that approach. To me, it seems like it could be a valid consideration in there, right? I mean, you're looking at staffing levels, and those fluctuate. It's not like you're gonna have the exact same staffing costs every quarter based on as your census might move up and down. So I think I don't think that's an unreasonable way to look at it. But I would encourage the same thing you did, is look at that and look at your lost revenue, and if lost revenue covers most of your awards, that's the much easier way to support, because you don't have to justify expenses when you have that going on with lost revenue.
Okay, so it's interesting you say that, because I kind of feel like the message that's been sent from the beginning is use lost revenue as a last resort. We really want you to use cost first and then look at revenue.
And that's true. That's true, Michelle.
Okay.
But I think what we're trying to say is, if you have COVID expenses that are black and white, we gave out COVID bonuses, we had to have a cleaning service come in, we had to buy all this PPE that we normally don't buy. In my mind, those are very black and white COVID expenses. There may be other expenses that are a little more gray. And so I think what we're trying to say is, don't beat your head against the wall trying to figure out, gee, I'm really not sure whether I should include this as an expense or not. Because if you have a lot of lost revenue, the way the process works is they're going to, you'll utilize your expenses, and then any remaining provider relief funds that you have can then be applied to lost revenue.
Okay, all right, I hear exactly what it's. Okay,
Yeah, so in other words, if you have a ton of lost revenue, then I think make a very reasonable effort to identify the expenses and include those in. But I wouldn't do anything where you feel like, gee, I'm really uncomfortable as to whether this is a legitimate COVID expense, et cetera, because you have that lost revenue sort of as a backstop to cover any remaining PRF funds.
Okay, yeah, that's a great strategy. Thank you.
No, you're welcome.
And it will help me sleep.
Well, and I think that's where a lot of this comes down to. And again, is hopefully one thing you take away from today is a lot of this is not black and white. But I think if you can sort of in your mind, and again, talk to your clinical folks, talk to your presidents and executive directors and just say, hey, we were making decisions back when COVID first hit and everything was a blur. Do you remember why we chose to do this? And just kind of talk through some of that stuff. And I think, and if you kind of get to the end of one of those discussions and you say, gee, I'm just really not comfortable as to whether I could justify this as a COVID expense. Okay, then don't. I think most providers that I've spoken with had a fair amount of lost revenue, so I'm not saying just gloss over your expenses, because I think those are important for a couple of reasons. One is, they just announced phase 4 for PRF, and they've announced that sort of the window is reopened, if you will, on phase 3. So if you think you were shortchanged on phase 3 of PRF, that you can reapply or apply for a reconsideration. So if you have, it's certainly worth the time to gather all your COVID expenses if you haven't done so already, and to get those tracked. What I'm referring to is the ones that are maybe a little more gray and people are really on the fence as to whether it would qualify. I wouldn't, do what you think is best, but I wouldn't feel like, gee, I've got to call this a COVID expense, even if I'm not entirely comfortable.
Okay, thank you.
Pete, I'm guessing you probably have some questions. Pete works with us here at CLA, but he's the outsourced controller for Patty Morse's facilities.
I actually worked with another member of our healthcare group this whole week. And my nose has been to the grindstone on both
Okay.
our organizations. There's a little kind of gray area because both organizations merged on 9/30/20. So I think coming up, once we hit that 10/1/20 moving on, I'm going to have a few more questions, but we were trying to just get through the lost. We're lucky enough where lost revenues is going to be a good part of this.
Lucky in quotations,
now,
right,
but,
Pete?
huh?
Lucky in quotations.
Lucky,
Yeah.
exactly. But yeah, I think the piece that you just touched on with the glossing over the expenses, I was a little guilty of that this week, seeing as though we kind of hit the lost revenue piece. So
Yeah.
I think now that we had this discussion, I'm going to be kind of circling back and just making sure that we come up with the best game plan for both organizations moving forward with phase 2, phase 3, and phase 4.
Okay.
So yeah, no, I appreciate the call out, but yeah, I will say CLA has, the gentleman I was working with, Sean, he was really knowledgeable, and
Yeah.
I've been firing off email after email. It seems like every time you get to a piece of this, you kind of look back and then you have another question about, okay, wait a minute, does this make sense? Okay, going through the contractual allowance, do I need on the reporting portal, breaking out the contractual allowance between Medicaid and if you have Medicare, stuff like that. Little details that kind of come up that that you guys have been really a good resource.
Yeah, you'll have to take Sean out to a nice lunch or something once this is all done.
For sure.
Yeah,
for sure.
So we've got about 15-20 minutes left. Let's just shift for a moment. I'm guessing most of you are in the middle of doing the PRF portal reporting. Happy to answer any questions that anyone may have. Certainly we can end early if people want to get on with their days, but since we're all here, if anyone has any PRF portal reporting questions, happy to try and help with those as well. All right, maybe I'll come to you guys with if I have any questions. It sounds like you guys are on top of things. Okay. Anything else that anyone wants to talk through related to PRF? Michelle, did you have something?
No, I am going to actually sign off. I just want to
Okay.
say thank you. That's always very informative. I appreciate your time.
No, our pleasure. Thanks for joining.
Thank you.
All right. Well, so we included our contact information. Obviously don't hesitate to reach out if we can be helpful. I will share the slides with Andrea and she will distribute them to everyone. Thank you for attending today. Thank you for your questions. I'm sure you'll have more questions and that's fine. Trent and I this has been like a part-time job for us trying to keep up with this and for us even, there'll be times where we say, hold on, wait a minute. And, you say you have to kind of clear your head and make sure it all makes sense. So please don't feel bad if you find yourself completely confused by this at various points.
Hey, Jonathan, let me just jump in for 1 second. I'm Roland Schuster from NFP. Based on our last conversation with you folks, the next CFO Forum is going to be focused on captive creation and viability relative to the liability insurance. So that's coming up in mid to late October.
October 28th.
Thank you, Andrea.
Welcome.
So please join us for that as well.
All right.
Thank you very much.
No, you're welcome. Thank you, everyone.
Thank
We'll
you.
talk to you next month.
Bye,
Thank you,
guys.
John. Thank
Bye.
you, Jonathan. Bye, everyone.
Bye.